move. We have with us all of our experts joining in on the show. All of you, afternoon. But Kunal, if I could first take a take on the Nifty, because, you know, this underperformance or a completely lackluster move comes at a time when global markets have been in a flurry, whether the West or Asia, like Shanghai.
I think it's extremely flat, a boring day, frankly, for the indices when you look at the Nifty.
Boring days, not just today.
Yeah, boring days for the last couple of days. Now, it's very difficult to comprehend or make sense of any trend over here for the indices because...
Kunal, I don't think you're wearing your mic. So while you mic up, let me take it across to Kush Bohra as well and find out what he's making of this flat move on the Nifty and whether or not, Kush, we're going to take any directional move.
And the reasons are fairly clear. If I look at the last 10 to 15 odd sessions, we've been in a range from 19,250 to about 19,500 odd, and we've not broken that range. I mean, the only time we've broken that range is on the downwards, on the downside a couple of days back. Back there, multiple resistances on the charts, 19,400, 19,500, where the 20 DMA and the 50 DMA lie. Also, if I put one more factor into play, which is the expiry, this month, this week we have the monthly expiry, and the expiry data suggests that 19,300 is witnessing some call build-up. 19,400 already had a very strong base, going into trade today. So there could be some pressure. I don't think we are up for a big move, at least in the next couple of days on the indices, at least not on the upside. As far as Bank Nifty goes, even in the morning, I had a view that 44,500 is a very pivotal level for a very simple reason. We were, almost there, but the 44,500 call had a very strong base and wasn't giving up throughout the day. And now we see Nifty slipping, Bank Nifty slipping just below that. So very similar views. We may consolidate in a range for the Nifty and the Bank Nifty, both at least in the weekly or in this case, the monthly expiry is over.
I think Kunal is now mic'd up. Kunal, so if we do end around 19,300 or below that mark, would that be a sign of a lot more inherent weakness?
There's no sign in the markets right now. Nothing. I mean, it's...
not on the upside, not on the downside.
No weakness,
it's going right, going left, but still standing at the same place. It's very tough to comprehend because, Nisha, a 44,000 index on the Bank Nifty is in a range of 80 points. Now, that's not even 0.25%. For the index, and that too we are talking of not a normal day but an expiry week where there's bound to be rollovers, then carry forward of positions, squaring off of positions, etc., which keeps the market participants a lot more busy. Now, if in such a kind of an expiry week and second consecutive day you're seeing the indices into a less than 100-point range, it's very difficult to comprehend which side the markets would probably want to tilt going forward. So, in this kind of a market, it's always best to try and play stock specific. But the concern with the markets right now is that the action is not towards most the FNO stocks, but it's towards the mid caps and small caps, and I think that's where a short-term trader could probably concentrate on.
Not much excitement at all when it comes to the trading, but is it a good time probably to invest for the medium to long term? Let's pose that question to Shibani Sircar Kurian, who's joining us on the show as well. Shibani, what's your take? A very, very boring market, but is it then the time to probably consolidate, look at the bets that you want to add in your portfolio?
Hi, good afternoon. So for the markets, if you look at it in two parts, one, in terms of the fundamentals and the delivery on the earnings side, we have nothing to complain about. Even in the earnings season gone by, the overall earnings trajectory for the broader market as such was largely in line with estimates. And there have been no major earnings downgrades for both FY24 and 25. So earnings trajectory remains fairly healthy. However, we have to contend that valuations today in the markets are not cheap, and valuations are above long-term averages. And whether you look at price to earnings, you look at price to book, you look at yield gap or market cap to GDP, on every parameter, market is telling you that valuations today vis-a-vis long-term averages is above long-term, above the mean level. And therefore, from that perspective, given the fact that even on a relative basis, our valuations are slightly above long-term averages, we do expect that we will have to contend with some degree of volatility in the near term. Of course, if there is any correction in the market, as long as earnings delivery continues, that would possibly be an opportunity. But at this point in time, we believe that given that valuations are somewhat elevated, markets could see some degree of volatility.
Right. Okay, let's just look at some of these movers. And Kunal, BHL, this is something we talked about, in the morning as well. What a move. Once again, after a very, very flat first or second half, actually, now the big move has come in 3.5% higher.
Well, yeah, I think that's where short-term trader is concentrating on, because when there is action into specific stocks, where there is momentum, there is liquidity, getting in, getting out of the stock becomes a lot more easier. That's where I think it makes sense, because when the markets are into a consolidated zone, the options or the number of stocks which trade in the direction of the markets, they drop down or they come down significantly. So I think BHL is one of those candidates. And the breakout which had happened for the stock last week, I think a 10% up move from 203 levels to 112 mark out for the stock, and then 3 days of mild correction. The stock has managed to digest all of that and probably restarted a new trend for itself. So it looks very, very attractive as a setup and as a chart. And I think, as we discussed earlier, I would probably be looking out for 130 plus as the next target for BHL.
Point taken. Kush, what about the entire chemical space that's definitely firing up, whether it's a Make Money Fine or a name like Alkylamine, Deepak Nitrite, pick up any of these names, even Himadri Chemicals, etc. for that matter. All of those stocks are soaring. Any favorites?
Deep Nitrite certainly looks good because it was due a breakup, and we're seeing that today on the back of very strong volumes. Very encouraging signs here. So I would actually not rule out a move from here up until 2250 and 2300 levels as well. And for any kind of fresh entry, 2080 is where I would place my stop loss. But you're right, the entire space is seeing a lot of traction. Even some of the other names, like SRF that's actually started the rally some time ago. And UPL also seems to be catching up now, which means the entire space, anything chemicals is doing well. So if someone's, got the patience to hold on, then I would suggest UPL might also turn out to be, a good bet in the coming months, because now the stock is, showing first signs of bottoming out. One of the last ones to perform, but then this, then in that regard, it has some catching up to do, right? So UPL for targets of 630 is where I would, also have my, something that I would have on my radar.
That's the technical side of
Summarizing all of that, but let me pose that question to Shibani as well. Shibani, is chemicals a space that you're looking at actively investing into?
Yeah, so chemicals, actually, specifically the specialty chemical basket, has been one segment where we have been structurally positive. Now, what has happened and what was being discussed on your channel just recently is that over the last 1 year, we've seen that there has been slowdown in discretionary demand globally, and that has impacted the chemical companies. Also, there has been elevated channel inventory, which has also impacted the pricing, plus the dumping from China, which had an overall impact. But if you look at this sector on a more structural basis, we continue to remain fairly positive in terms of growth. We believe that the specialty chemicals sector is a segment where, on a slightly longer term basis, growth should continue to remain positive. The sector continues to remain a beneficiary from a China plus one strategy. And India, in terms of market share in the global specialty chemicals construct, market share of India is fairly low. And therefore, we believe that any increase in market share would lead to strong structural growth. So that is one segment we are positive on. And plus, what we've also seen is that many companies have set up capacity, so investments have been made. And therefore, as and when the demand revival starts, possibly in the second half of the year, some of these specialty companies are pretty well placed to capture that demand momentum and get back on growth. The sector has underperformed over the last 1 year. However, now valuations are looking a little bit more reasonable. And given the fact that long-term growth prospects remain intact, this is a fairly positive space for us in our portfolios.